Buy Now, Pay Later has become a mainstream financial product that continues to grow in popularity with tens of millions of users, especially young and lower income Americans who want flexible payments and no credit card debt. But personal finance experts warn there can be serious downsides to paying this way. I'm Herb Weisbaum, the Consumer Man, a contributing editor at Checkbook.org.
Welcome to Consumerpedia at Checkbook.org. We're the nonprofit that helps consumers select services, avoid trouble, and save money. Because we don't accept any advertising or take money from any business we recommend, you can rely on Checkbook.org to be completely independent and objective. Now, here's the host of Consumerpedia, America's consumer expert, the Consumer Man, Herb Weisbaum.
Once limited to online shopping, Buy Now, Pay Later is rapidly expanding into brick and mortar stores, and it's now being used for everyday purchases such as groceries and gasoline. The companies providing pay later financing say they're offering a low-cost payment option that enables consumers to make small dollar purchases without incurring high fees or interest. Consumer advocates worry Buy Now, Pay Later makes it too easy for people to buy things they can't afford, resulting in late fees and costly bank charges. There's a lot to talk about with our guests. Ted Rossman, Senior Industry Analyst at Bankrate.com.
Hi, good to be here.
And Lauren Saunders is Associate Director at the National Consumer Law Center, a nonprofit that fights for economic justice for low-income and other vulnerable people who've been abused, deceived, discriminated against, or left behind in our economy. Hi, Lauren.
Hi, thanks for having me.
So, Ted, let's start with you. Let's make sure all of our listeners know how a Buy Now, Pay Later loan works, the typical short-term loan.
We're talking about companies like Affirm, Afterpay, and Klarna. A typical flavor is 4 interest-free payments over 6 weeks. You've probably seen these on various e-commerce platforms. It's important to note, though, that Buy Now, Pay Later is evolving, and it's not just 4 interest-free payments over 6 weeks anymore. Some of these plans are lasting longer, 3 months, 6 months, 12 months, sometimes even a few years. Many of those longer plans do charge interest. And ironically, it's actually similar to what a credit card would charge, maybe 15 or 20%, sometimes more. This industry has positioned itself as the anti-credit card or the kinder, gentler form of financing. Interestingly, it is behaving more credit card-like over time, which we can get into. But basically, we're talking installment financing. You're committing to a specific length of time for a specific purchase. That's what makes it different from a credit card, where you might get a $5,000 limit and they just turn you loose. Buy Now, Pay Later is really a one-to-one relationship usually. It's one certain purchase, and you're committing to a certain number of payments with a certain interest rate. Sometimes zero, sometimes not.
And while they never say the word loan, it's a loan, just like any other loan.
Yeah, it's debt. I mean, that's an important point. People say that credit cards can be like power tools. They can be really useful or dangerous, depending on how you use them. I would extend that analogy to Buy Now, Pay Later. Sometimes this works for people. They like the ability to spread out their cash flow and afford things in installments. Other times it's a ticket to impulse buying and overspending. It really does depend how you use it.
And we're going to talk more about that later in the episode. Lauren, I often hear Buy Now, Pay Later described as a modern version of layaway. Remember when a store would put an item aside for you until you paid off the purchase? But Buy Now, Pay Later is nothing like layaway.
That's right. Layaway is save first and buy when you have the money. Buy Now, Pay Later is buy now when maybe you don't have the money and split up into more payments. But it can make things look more affordable than they really are.
So let's talk about who's using these loans. A survey by the Federal Reserve released in May found that most of these are being used by low and middle income adults. Nearly 3/4, 72% of those with an income of less than $50,000 said they used Buy Now, Pay Later because it was the only way they could afford to make a purchase. Lauren, what does this tell you?
Well, if you can't afford to make a purchase in full today, it's not clear to me whether splitting it up into 4 payments over the next 6 weeks is going to make it a lot more affordable. And we're seeing that some people are finding Buy Now, Pay Later makes things look cheaper than they are, and then they end up in trouble.
And because it makes it look cheaper than it is, you may buy more than you were expecting to buy.
That's right. That's one of the reasons that stores and websites like Buy Now, Pay Later, because they find that people buy more, but it's not necessarily good for the consumer if they're ending up with purchases that they really can't afford.
Ted, this same study found that nearly 24% of those who use Buy Now, Pay Later, nearly 1/4 of the Buy Now, Pay Later customers, made a late payment. And that's a sharp uptick from 18% who made late payments in 2023. What happens if you don't pay on time?
Some of these providers don't even charge late fees. Affirm has famously not charged late fees. Typically doesn't affect your credit. This is what's so interesting about this, is that you talk about the carrot or the stick approach. There's not much of a stick with buy now, pay later. There's sometimes no late fees. There's often no credit score damage. Really, the only way this is going to appear on your credit report right now is if you're so late that you go to collections. So then you might ask, well, why does anybody pay them back? The biggest appeal has been the carrot of continuing to use these services. I know in the aggregate that sounds alarming that 1 in 4 users have paid late. However, the delinquency rates that these companies report is actually lower than what we see on credit cards. Klarna's delinquency rate is about 0.5%. Affirm also has a lower delinquency rate than credit cards. The delinquency rate for credit cards is about 3%. So it sort of depends which lens you're viewing this through. I mean, yes, maybe 1 in 4 have paid late at some point over the next year, but overall, this industry is held up better from a delinquency standpoint than expected. And really one of the biggest reasons for that is a lot of people like it and they want to keep using it.
Lauren, do you have any thoughts on this?
Yeah, there's another problem, though. The late payments show that these loans are unaffordable. And even if you don't go delinquent, the company is going to keep hitting your account to try to get that money. And that debit can trigger overdraft fees. So they may get repaid if the bank eventually pays it. But if it overdrafts your account, you could have a $35 fee on top of the late fee, which can really add to the unaffordability of these loans.
Good point. You know, people are now using buy now, pay later to buy gasoline and groceries. It's become a common way to pay for takeout or food delivery services. You can now use Klarna to pay for DoorDash purchases of $35 or more. I don't know about you guys, but I find this troubling.
I think buy now, pay later makes most sense for large purchases, occasional purchases, but for everyday things like gas and food, you're going to have to buy gas and food next week. So why put off some of the payment of this week's food into next week or the week after that? It just can lead to a lot of complicated payment dates and debt that sort of is piling up.
Ted?
I agree. I would say that the best use case is something like a couch or a refrigerator or a new set of tires. I mean, something that you hopefully really need. Some people like the ability to spread out the cash flow, whether they have the money or don't. I mean, there's even some of the so-called Henrys, the high earners not rich yet, that are using buy now, pay later to buy a Peloton bike, let's say. I mean, there's a certain kind of person who's buying a $2,500 exercise bike, but for some, if they're able to split it up over time, it's interest-free, you pay $50 a month, that's the appeal. But I agree about the downside of some of the short-term plans, gas, groceries, other consumables. Lauren's right. I mean, you're going to need more before that 6-week payment plan is even up. And you are at the risk of stacking payments. $20 here and $50 there can still add up. So I would see this better used for some of the longer term, bigger ticket items. But you have to watch that interest rate because, like I said, a lot of the longer plans are not interest free anymore. It has a 15 or 20 or sometimes higher interest rate. That's the fine print to beware of.
Another problem with using buy now, pay later for routine things like food. Unlike with a credit card, you have one bill at the end of the month. You know how much it is, you pay it. Buy now, pay later, you're splitting every purchase up into 4 payments. Well, if you're doing that all the time, you're having all sorts of payments coming out of your account every other day, perhaps. And it's a lot more complicated and harder to manage your finances and make sure you actually have the money when the payments come in.
And people are having that problem. We're going to talk in the next section to a credit counselor all about that. You know, buy now, pay later lenders claim they offer a smarter way to pay with no surprises, but is that really true? We'll look at ways buy now, pay later can cause serious financial problems. I'm Herb Weisbaum, the Consumer Man, and this is Consumerpedia, powered by Checkbook.org.
At Checkbook.org, we have the answers to your consumer questions 24/7. That's Checkbook.org. We're a unique nonprofit that can help you with select local service providers, avoid trouble, and save money. Because we don't accept any advertising or take money from any business we recommend, you can rely on Checkbook to be completely independent and objective. Our advice is always free. Ratings of local services are available with a subscription. If you live in one of these 7 metro areas and haven't joined Checkbook yet, check us out. Boston, Chicago, Philadelphia, Seattle, San Francisco, Minneapolis, St. Paul, and Washington, D.C. Get your free 30-day subscription by going to checkbook.org/Consumerpedia.
Buy now, pay later lenders promote their service as a smarter way to pay than with credit cards, one that offers flexibility and no surprises. Approval is instant and there's no hard credit check. The Financial Technology Association, that's the group that represents buy now, pay later lenders, told Checkbook its members have safeguards in place to make sure customers don't take on too much debt. For example, as Ted pointed out, those who miss payments cannot make new purchases. Affirm and Klarna, two of the largest buy now, pay later companies, insist they only extend credit to those who can pay. So let's dig deeper into all this. First, I would question that buy now, pay later lenders are not encouraging people to borrow as much as possible. Thoughts on this? We'll start with you, Ted.
One thing that's really unique here is that they're underwriting each individual purchase. So it's different from a credit card lender that might give you a big credit card limit and then you just sort of have at it. That's what they mean when they say they're not approving you for more than they believe you can afford. Now, there are different ways to look at this, of course. There's what's a wise financial decision and what's not. I mean, a lot of times a lender will approve you for more than maybe you should borrow because they're only looking at, let's say, your credit score or your income or some combination of the two. And they're not doing the most detailed examination. And I've heard of college students who, they thought it was $20 here and $50 there, and they ended up in over their heads with BNPL. But it's also true that there's a school of thought that says, well, how much trouble could you get into with a relatively small dollar loan over a relatively short period of time? You can get into trouble, but that's one of the things that has helped the BNPL industry, that the typical ticket size is a few $100s. A lot of these plans are paid back in 6 weeks. But these are some of the reasons why the delinquency rate has been lower than many feared. The other thing is that the job market's been good. So what if that changes? I mean, a lot of people say that BNPL's never really been recession tested because a lot of these companies were formed after the financial crisis. And yes, we had that brief COVID recession, but that was very different when you think about all the stimulus money and the fact that so many businesses were closed. I mean, that was not a normal recession by any means. It's an open question for the industry. So far, better than expected, but there are fears that the other shoe could drop. And in fact, recently when we had all that tariff turmoil on Wall Street, BNPL company stocks dropped more than traditional credit card providers like American Express because the feeling is Affirm and Afterpay and Klarna might have a riskier audience. A lot of this is still untested.
Lauren, your thoughts?
Well, buy now, pay later companies, they certainly care about whether they get repaid, but that's not the same thing as ensuring that the consumer can afford the purchase because they're going to take out that money automatically from your bank account every 2 weeks. So they've got a pretty good chance of getting their loan repaid, but it could overdraft and then you're stuck with a $35 overdraft fee, or it could make it more difficult for you to pay for your rent or your auto loan. So I'm not confident that the kind of underwriting they're doing is really enough to ensure that these loans are affordable for people.
Which leads us to my next point. Credit counselors who are on the front line dealing with people who have financial problems tell me they are seeing an increasing number of clients struggling to pay multiple buy now, pay later loans. Here's what Laura Cicerelli, an NFCC certified credit counselor at American Financial Solutions, a nonprofit counseling agency based in Seattle, told me.
We're seeing people really struggle with these types of accounts. The main problem that we're seeing is that most people who have buy now, pay later accounts don't have just one. They have multiple, and the payments tend to stack up really quickly. It can be really hard to keep track of them. People aren't familiar with where they can go to track these payments online in the way that they're familiar with how to log into like their credit cards or their bank accounts. So it can be really easy to lose track of these payments and have them stack up and leave you overextended in your budget. The other problem that we're seeing is that consumers are using these products to cover purchases that they don't have the cash on hand for, and their budgets are already tight, which is why they're having to turn to these products, and the recurring payments that then stack up are making those budgets even tighter. So it's this kind of compounding problem. There's no interest on the loans, which is fantastic, but it doesn't mean that the payments aren't creating a hardship.
So you get a monthly statement with a credit card, as one of you pointed out, but you don't get statements from the buy now, pay later lenders. And as Laura said, if you get 5, 6, 7, 8, she's seen people with 10 of these going on all at the same time, you may have no clue as to when the money's coming out of the bank and the money might not be there. Isn't that the problem, Laura?
Exactly. It can be a lot more complicated to manage than just having a credit card with one statement and one payment every month.
Something else to consider: if something does go wrong with the transaction, who's going to help you? Do you go to the buy now, pay later lender or the retailer? From the complaints I've seen, you may get the runaround. The one points to the other and you're left in the middle. Again, you might not have that problem if you made the purchase with a credit card.
That's actually one of the biggest problems that BNPL users identified in our recent survey. 14% said they've had difficulties with returns and refunds. You're right. Sometimes there is this middleman kind of thing where you sent the merchandise back, but how do you get your money back? That can sometimes be a pain point.
And Lauren, if you're disputing this thing, I've heard from people who say, but they're still dinging me for the money while I'm arguing that I got a defective product or whatever.
That's right. With a credit card, you have really clear dispute rights. And if you didn't get what you paid for, or you returned an item, you have a right not to pay the credit card until that's resolved, and the bank has a duty to investigate it. Now, the Consumer Financial Protection Bureau says that buy now, pay later companies have those same duties to help people when there are disputes or mistakes or unauthorized charges. At least they said it last year. This year, the Consumer Financial Protection Bureau has backtracked, and so there may be a dispute about what the law is, but I think it's essential for this industry to help people with their problems and not just leave them hanging if they return something and are still stuck paying a loan.
Looking at the Better Business Bureau website on June the 1st, in the last 3 years, the BBB received 6,490 customer complaints about Affirm, 3,405 complaints about Afterpay, and 2,713 complaints about Klarna, which they give a C- rating. Each company has a rating of 1 star out of 5. I think that indicates that there is a little bit of a problem with this industry.
There are a lot of people who love buy now, pay later, and they really like the ability to afford things now and pay for them in installments. But it's also true that it can get you into trouble. To me, buy now, pay later is something that most people should aspire to graduate from. Not to cast aspersions, but I honestly think this is more of a starter financial product. I would love for people to get to the point that they can pay a credit card in full and get the rewards, get the buyer protections, get some of those advantages that buy now, pay later doesn't necessarily have. Then again, there are some loyal fans who just really like this whole installment thing. You just have to be careful that you're actually paying it back and that you're not overdoing it, because sometimes there can be an impulse buying angle. Affirm even talked about that. Their CFO said once that their delinquency rate spikes at 2 a.m. I mean, that definitely speaks to people browsing their phones late at night. Maybe they're bored, maybe they've been drinking, maybe they click buy and then they later regret it. That is a definite pain point.
I don't think this is a starter product. I think the research is clear that most people who have buy now, pay later loans also have credit cards, other forms of credit. So the question is, are they turning to buy now, pay later when they've maxed out on their credit and they really are struggling and shouldn't be taking on more credit? I also don't think we can say buyer beware on the issue of disputes and mistakes. It's the duty of these companies to take care of problems and make sure that people aren't being caught between the store and the buy now, pay later. So it's their duty. That's not something that consumers should have to figure out.
All right, up next, how buy now, pay later compares to paying with a credit card, plus tips on the right way to use these pay later loans should you decide to go that route. I'm Herb Weisbaum, the Consumer Man, and this is Consumerpedia, powered by Checkbook.org.
Consumerpedia Fast Facts. According to a recent Motley Fool Money survey of people who use buy now, pay later, slightly more than half, 53%, use this payment option more often than their credit cards. While available in many stores, buy now, pay later is most often used for online shopping. The survey found the key purchases made this way are electronics, followed by clothing and fashion accessories. More than a quarter of pay later users said they buy groceries, furniture, or appliances this way. And 31% of buy now, pay later users said they lost track of the payments they owe at one time or another.
Buy now, pay later started with online purchases and has quickly moved into the brick and mortar space. It's an option at the checkout counter at many major retailers. That's because pay in 4 is good for business. According to a market analysis by RBC Capital, offering buy now, pay later financing increases conversion rates by 20 to 30% and boosts average sales transactions by 30 to 50%, the company says. That's why retailers pay these companies a steep commission for helping complete the sale, between 3 and 6% in most cases. That's more than they pay the credit card companies. They're doing it, Lauren, because it works, right?
That's right. It gets people to spend more, and then that's not necessarily good for individual families.
Is there a psychological aspect here that if you're only paying $25 for a $100 item, somehow you think, oh, I got $75 free money here to play. I can buy some accessories to go with this or whatever?
I think that's right. It also just looks cheaper, right? Paying $25 seems a lot cheaper than $100, and people aren't necessarily fully paying attention to how quickly the rest of that $75 is going to come due.
Ted, in a recent article on Bankrate.com, you noted how the industry has been pushing deeper into more daily and in-person transactions, and I like what you wrote, so I'm going to read it here. It's an ingenious business model that helps some people afford things they couldn't otherwise afford. The problem, though, is that sometimes it allows you to purchase stuff you didn't necessarily need and that you can't really afford.
That's right. I think that the business case here is very compelling. These companies are trying to be the next super app. They're trying to be the next PayPal, basically. There's a lot of different ways to pay for things, and they want to be in on all of them. So it fits in with this shift towards technology, but it's also pay now with their debit card. Affirm and Klarna and Afterpay, they all have debit cards now. So you could pay right away, or you could pay in weeks with this 4 payments over 6 weeks model, or you could pay in months with the 6-month or 12-month or 2-year kind of plan. It's a very smart business model. Now, whether or not it's good for the consumer depends on how you use it. They are pushing more into physical transactions. It's not just e-commerce anymore. You can use those debit cards to either pay right away or turn it into an installment plan that you pay back over time. They're pushing more into services, travel, dining, veterinary bills, dental bills, things like that. Again, it depends on how you use it. You think about some of the point of sale financing for dental and veterinary, things like the Care Credit credit card that have very high interest rates. Some people are paying upwards of 30% on products like that. So that's the appeal of buy now, pay later is, oh, you're telling me I can split this dental work into a bunch of installments that maybe fit into my budget a little bit better. The key is you have to look at the fine print. It's not one size fits all anymore. There's a lot of different options here.
And in your survey, your recent survey, you found that 24% of those responding said they had overspent using buy now, pay later. So it's clearly a problem for a bunch of folks.
That's because people look at the installments, not the total cost. And that's a big pitfall. And we see it with infomercials too. I mean, you talked about how this is sometimes viewed as reverse layaway. It's also a twist on the old infomercial model. I mean, it's kind of like, 4 easy payments of $49.99 and it could be yours today. Sometimes there is this false sense of urgency. Sometimes you only look at the installments and you don't think about the total cost. You need to consider all this, how much you're paying in total, what's the term, what's the interest rate. Lauren made a good point earlier about the confusion of having a lot of these plans running at the same time because, they can set you up with auto payments, but that could maybe lead to overspending or overdrafting. And also, right now, Affirm doesn't really know what you're doing with Klarna or Afterpay or vice versa. There's a push to get more credit reporting underway here, but it's been slow going. There's a lot of blind spots here for lenders and some for consumers as well.
So which means if you're not paying your Affirm bill and they shut you down, you could open up a loan with Klarna or Afterpay or anybody else and just keep right on going.
And that's the biggest reason that I would give to providers to say why we need more credit reporting. There's other ones too. It would be good for consumers, but it would be good for lenders to know, if someone's behind with 2 of your rivals, do you really want to lend to them as well? I think credit reporting would be useful for better or for worse. I mean, it should help your credit if you're using it responsibly, and it should hurt it if you're falling behind. Traditionally, credit reporting has been kind of a square peg, round hole thing with buy now, pay later. It doesn't fit neatly with our understanding of credit. For example, you're penalized on the credit reporting system if you open and close a lot of credit card accounts frequently, or if you max out cards. Buy now, pay later by nature is basically a series of often short-term, small dollar loans that are opened and hopefully paid off relatively quickly. I would like to see this come more into the light. There are some pilot programs underway between Affirm and Experian and Klarna and TransUnion. I'd like to see more of it.
I was asked this question the other day, so Lauren, I'd like to ask you, is buy now, pay later better than taking out a payday loan?
Yes, I think it is. I mean, payday loans are pretty terrible, so it's not hard to be better than them. I mean, they've got, short repayment periods and steep fees. But, whether they're better than a credit card, credit cards, have their own downsides for sure. It's very easy to get deep into credit card debt. It takes forever to pay it off, and you can end up paying interest for years and years. So while you have a lot of strong protections on credit cards, especially if you have a dispute around something, it's not great for managing your finances either. And certainly any credit product, if you can't afford things today and you're buying everything on credit, whether you're using a credit card, buy now, pay later, or something else, that's going to be a problem because you're just taking on debt you really can't afford. In some ways, I think the sweet spot product, which still needs some improvement, is the longer term installment loans that do have interest, but they've got more affordable payments over a longer period of time, 6 months or a year. Now, you don't want to stack those up either, and they don't have the same clear dispute rates that credit cards have. So we don't quite have the Goldilocks product out there today, but I worry that buy now, pay later is too short and too deceptively affordable. Credit cards are too long and too much interest over too much period of time, and people really, in general, need to be careful with credit no matter what they're using.
Well, I'm a big believer in credit cards if used wisely. Used wisely means you make the purchase and you pay it off when the bill comes. You get all the fraud protection. You get chargeback rights. There's a lot of other perks that you get with credit card companies. And it also builds a credit history, which buy now, pay later doesn't do. So I'm a believer that if you use a credit card wisely, and there are many millions of Americans who use credit cards wisely, that is a very smart way to go. Either you disagree with that?
Well, again, my point was, putting credit on your credit card and then carrying it for a long period of time. I mean, sure, I do. I buy everything on my credit card because I know I can afford to pay it off at the end of the month. But a lot of people can't do that. And so just paying the minimum payment for, month after month, where you're really just paying interest and not paying off the credit card, it's, very easy to amass a lot of debt that is hard for people to handle. So if you can afford it, for sure, but it's not necessarily great for managing your finances if you're operating a little more paycheck to paycheck.
Credit cards are great if you pay them off right away, and that's the key. It's roughly half and half when we talk about cardholders who pay it off right away and cardholders who carry potentially very expensive debt for a long period of time. I would note that credit cards are the gold standard in terms of buyer protections, everything from disputes to purchase protection, extended warranties, travel insurance. There are a lot of nice benefits there used properly, and rewards are great too. So credit cards work to your advantage for about half of Americans. The other half, if you have pricey credit card debt, that's where I would say don't dig the hole any deeper. And for some of these people, buy now, pay later is a viable alternative. Sometimes it can get them into trouble, so you need to be careful about that. But like Lauren said, too, you can use these selectively. It's possible to have both. I mean, I could envision someone using buy now, pay later some of the time and credit cards some of the time. It just depends on what you're being offered. If buy now, pay later is a good long-term, low or no interest plan, that could make sense for your couch or refrigerator or something like that. But just be careful that you can swing the payments and think about that total cost of ownership, not just what's due every 2 weeks or every month.
So let's bring it all home. If you are going to use buy now, pay later, and some people are going to use it for certain purchases, I guess the rule would be try to have only one going at a time and pay that off and then move along to the next if you need to, and make notes somewhere in a calendar as to when those payments are going to come out of your checking account so you make sure there's money in there. Anything else I missed?
I think buy now, pay later is really best for occasional purchases, not for routine, everyday expenses. Occasional things where you've planned for the payments, you know you can afford them, you just need a little extra time. For a lot of people, I don't know that 6 weeks is really going to be enough extra time, but for occasional purchases, sure, it might be.
Yeah, I would agree with that. One little anecdote that I thought was actually a very clever use of buy now, pay later is I have a coworker who used buy now, pay later this winter to buy a season-long ski pass. It was a $900 purchase. She split it into 3 interest-free monthly installments of $300 apiece. That worked for her. That was a nice way to spread out some cash flow, and she had the money to pay for it, but it was kind of this, if they're going to give me 3 months interest-free, I might as well take it. Used responsibly, that can make some sense and provide some breathing room in the household budget. But if you're spending $900 that you don't have on a ski pass or something else, what's to say it's going to be better in a month or 2 or 3? So that again comes back to the know thyself, know how you're going to use it, go in with a plan. I mean, if you opt into something like that, make sure your budget allows for those 3 monthly payments of $300 so that you're not just kicking the can down the road and running into financial trouble later.
Amen. Want to thank our guest, Ted Rossman, Senior Industry Analyst at Bankrate.com.
My pleasure. Good to be here.
And Lauren Saunders, Associate Director at the National Consumer Law Center. You'll find them on the web at nclc.org.
Thanks so much. Great to be here.
Let me jump in here with an update. Since we recorded this podcast, FICO, the company that provides credit scores to 90% of all lenders in the U.S., announced that it will soon include buy now, pay later loan history in some of its new scoring models. The new credit scoring models will be introduced in the fall, and individual lenders will decide whether to use them. You'll find a complete report about this in the consumer news section of checkbook.org. Before we go, a few related Consumerpedia episodes you might want to check out. Episode 80, Debt Busters, Real-Life Success Stories, and Episode 50, Finding a Credit Card That's Right for You. And with that, we come to the end of another episode. Thank you for listening. We hope you'll rate this episode and follow us on Apple Podcasts, Spotify, or wherever you listen to your podcasts. Remember, we release new episodes every other Thursday. Another way you can support this show is to follow us at Consumerpedia on Facebook and Instagram, at Consumerpedia.org on Blue Sky, and at My Consumerpedia on X. You can find me at consumerman.com. I'm Herb Weisbaum, the Consumer Man, always looking out for you. Until next time, be smart and shop wisely.
Consumerpedia is a public service of Checkbook.org. We're a unique nonprofit that helps you save money and make smarter choices. You can count on Checkbook to help you find the best services and avoid the worst, with local ratings that are accurate and unbiased. If you live in or around these 7 cities and haven't joined Checkbook yet, check us out. Boston, Chicago, Philadelphia, Minneapolis-St. Paul, Seattle, San Francisco, and Washington, D.C. To get your free 30-day subscription, go to checkbook.org/Consumerpedia. Consumerpedia, empowering consumers to save money and make smarter choices.